you very much to Finance Sim for the opportunity to speak to you today. My name's Rowan, and I'm the chairman of the Elite Investor Club, which is a worldwide network of high net worth and sophisticated investors. So I'm delighted that you're here, but I have to tell you, you're a little bit weird, because 95% of the population, in my experience, has zero interest in their financial future. So the fact that you already have that interest, and the fact you're prepared to give up your morning to come to an event like this, puts you in the top 1%. So I'm very privileged to speak to you, but I have to tell you, you are a bit weird. So apologies for that. A little bit about what we'll cover. I'm going to tell you, see, basically I'm kind of should be sitting where you are. I'm not a fund manager, I'm an investor. And the way I run the Elite Investor Club is very selfish. I'm looking for new investments for my own portfolio, and so I look at lots of things, I do due diligence on them, and if I like them, I put my own money into them first before sharing them with members of the club. But I'm going to give you a little bit of my financial background, and then I want to talk a little bit about the club, and then about some direct investments that I've been making recently that I think might be of interest to you. So a little bit about me. I've mentioned the club. We have offices in London, Singapore, and Beijing. I'm delighted to say that as of this week, we're launching in Israel through the Israeli Passive Income Center that's being set up by Michael Shmulevitz and Boaz Alpern from Emerald Investments, who have the stand here today. I also chair an organization called Who's Who Publications, and we recognize business leaders primarily in Britain. Last summer I was honored to speak in the Houses of Parliament in Westminster when Zach Goldsmith, who's now standing for election as Mayor of London, presented a Who's Who award to Nicola Horlick, who's a kind of a legend in the City of London, and she's just set up her new alternative finance company called Money & Co. I was even more honored later in the summer to be asked to speak at the United Nations headquarters in New York as part of something called the Global Economic Initiative. And I used that opportunity to launch my charitable foundation, which is called the Plain English Finance Foundation. And that provides free financial education and coaching to people who've been in trouble with debt problems. At the end of last year, I published my second book, which is called Encounters with Investment Icons. And this is really the transcripts of my interviews with the movers and shakers in the financial world, including a guy called Harry Dent, who's one of America's leading economic forecasters. He's a demographic analyst, so he has all kinds of data about how the aging population is going to impact the world, the countries, our investments, and so on. Fascinating guy. Also, a lot of the kind of major fund managers in Britain and so on I interviewed there. So I do that. I also chair a company called Plain English Finance, which is a regulated provider of investment advice in the UK. So I kind of straddle both the regulated and the unregulated world. But my primary passion is looking for new and interesting things to invest in and sharing them with my members. But my life was not always like this. If I take you back to 1999, I'd spent 20 years in the corporate world. I was a director of Texas Instruments, and I ran a division that was a little bit like, say, Amdocs that you have here in Israel. We sold billing systems to telecoms companies all around the world. And if you've done a lot of business travel, you'll know that everybody in the office thinks it's terribly glamorous. The reality is you go to a crowded airport departure lounge, you stay in some boring hotel, and you spend all your day in meetings. Then it's back to the boring hotel, back to the meetings, back to the hotel, back to the departure lounge, and home again. That's the reality of my life in 1999. But I was making a lot of money, which was the good part. But I didn't have time or, frankly, the knowledge to know how to manage it. So my solution was to appoint a wealth manager who looked after it for me. And I was probably the ideal client because I gave them lots of money and I just did whatever I was told.
What they did, looking back, was to put all of my money into the NASDAQ. If you recall the late 1990s tech boom, you'll know what was going on. So it was brilliant. I got in about here, and then every morning I would wake up, 10,000 shekels better off than I was the night before. I thought this investment game's really easy, it's brilliant. And I go for my annual review, and they tell me how much more money I've made and all this sort of thing. Yeah, you notice that. So here we are at the year 2000 and the millennium. I go to my next annual review in June, and it's doing this. And I'm saying, now look, guys, I'm not an expert, but that doesn't look quite so good to me. Shouldn't we take our money kind of off the table and go do something else? And they said, don't be such a wimp. This is obviously a correction in a raging bull market. It's going to be up there this time next year. I said, okay, guys, you know best. You're the experts. So I came back in June 2001, and that was the picture. And that's what a loss of almost 1 million shekels looks like on a chart. So that was pretty bad news. But there was more bad news to come, because they said, well, Mr. Rowan, I'm afraid these losses take your net worth below the level at which we look after clients. So I'm afraid you're fired. So being sacked by my own wealth manager was the point at which I thought, okay, I've got to take control of my financial future. So this is the point at which I thought, I can't do any worse than this. I've got to take charge. So I actually, I wrote a report for our club members on the steps I've taken since then to kind of take control and achieve the financial independence I enjoy today. I'll just very briefly, this is like a 40-page report, but the first thing was what I think is essentially an emotional rather than a logical decision, which is to take control, and it was, I suppose it was embarrassment, it was a sense of loss, a sense of failure, but whatever it was, it made me think, okay, ultimately I can blame them if I want to, but it was my fault because I didn't delegate to my advisors, I abdicated. And there's a big difference. You've got to know what you're doing, and you've got to know what your advisor is advising, otherwise you are exposed. Second thing I did was to get educated. I read all sorts of books, went to seminars, started mixing with people who knew this sort of stuff. That led to me getting connected with people who I could like and trust in the financial world. Ultimately, it led me to a strategy of acquiring assets. I really like income-generating assets, because the more you can generate passive income, the less you have to rely on work or business or whatever to make your money. So I love passive income. I love owning real assets. But I also think it's quite hard to become seriously wealthy without building businesses. As an employee of someone else, there's a finite, unless you're the CEO of a big successful company, there's a limit to what you can earn and invest. And a lot of the serious wealth in the world comes from people who have built and then sold businesses. So, part of my strategy for wealth creation has been to begin with part-time businesses while I was working, or to acquire existing businesses. One of the things I seem to have a knack for is turning around businesses that are struggling. So I've done a bit of that as well. And of course, as you start to accumulate assets and income, your biggest enemy becomes the tax man. And does anyone here think that taxes are going to get lower in the next few years? Governments are running out of cash everywhere. They're struggling to make their budgets balance. And who do they come after? People like us. If you've got some wealth, you've got some assets, you might as well paint a big target on your chest and say, come and get me, tax man, I'm here. And that's what's happening, certainly in the UK at the moment. Our Chancellor has gone after private landlords, one measure after another, just twisting the knife, punching them again with more and more things. So there are things you can do to limit your tax bill. And as you get more and more wealth accumulated, you need a better and better team of advisors. And you just got to pay the fees and get the advice, because ultimately they'll save you a lot more than they cost you. But the other thing I think is critical is measuring where you're at. And there are two measures I'd recommend you to do at least quarterly, preferably monthly. One is your net worth, so everything you own minus everything you owe gets you your net worth, a simple spreadsheet. Hopefully at the bottom is a positive number. And obviously if you look to increase that number every month, it's amazing how that becomes a kind of self-fulfilling prophecy. But here's the other thing I measure, and this might not be so obvious. I measure my passive income. If I stopped work tomorrow, what would my income be in the next 12 months from buy-to-let property, from dividends on shares, from interest-bearing accounts, bonds, loan notes? That's an interesting number to track. And again, as you start to model and manage that, you can start increasing your passive income every month. And then that, again, becomes a self-fulfilling prophecy. And as you start to increase your income, you get all sorts of choices. You can work 4 days a week instead of 5. You can fire those pain-in-the-arse customers that you don't want to work with anymore. You've got all these kind of choices. So measure monthly is critical. Now, I think the financial industry's got it all wrong. Speaking as an investor rather than, if you like, a professional. They spend all their time talking in jargon like this, about AUMs and yields and all these acronyms that they come up with for our pensions and our tax wrappers and loan notes. I don't think any of us wake up in the morning thinking about stuff like this. I think the financial industry would be far more successful if it started using terms like dream fund or bucket list account or lifestyle account, financial independence fund, because what to me it really all comes down to is designing the life you want and then funding that from your portfolio. So for me, I like to live in London, so we have homes in Richmond in the southwest of London, but I also like some decent weather because the London weather's lousy. So we have a place in Antibes in the south of France, and we spend about a week of every month there. I'm a bit of a petrol head, so I like to drive a nice Jaguar. I've just had my 60th birthday. Now, I remember when my parents turned 60, the thing they got excited about was a free bus pass. Now, I'm a proud member of the baby boomer generation. We do things a little bit differently. So for my 60th, my wife Daphne, who's here with me today, bought me a present, and I'm going to be driving this car at the Le Mans circuit later this summer as my 60th birthday present. So I think that's a lot more exciting than a bus pass. So, your dreams will be completely different to this, but you will have something you want to do in your life and achieve in your life. So you design that, and then you fund it from your portfolio. And I use a technique that's totally different to what the professionals use. I call it lifestyle asset allocation. So what I look at here is, for the basic things like paying the mortgage, putting food on the table, whatever it is, I have my safest, lowest risk investments. Then for the medium things like, holidays and clothes and whatever, I have the medium risk stuff. And then at the higher end, these are the investments that will fund my motor racing or keeping Daphne in the style she's become accustomed to. That all comes out of this stuff. So each of these assets is doing a different job. And if there's a problem up here, then I just won't do as much racing this year or whatever, because, that's how I'm funding it. So that's my approach to it. Maybe non-technical, but it works for me. My strategy, well, just basically live within your means, save regularly, invest in assets. As you start to accumulate more, you have to look at other options. So I'm now making sure that I have wealth in and out of my pension. Pensions have become a real political football in the UK. In and out of the UK and the EU, and also potentially having an escape plan. A lot of family offices have what's called a last plane out strategy. Yeah, I mean, going to a different country if the tax burden became too high or whatever. So there are 3 tax havens within 90 minutes of London, for example. But a lot of people I speak to don't have any thought about that. They never give any thought to it, But yeah, I think you should have a plan for what, if you had to go to another country or if the tax burden became too high, what would you do? Just a little bit about the Elite Investor Club. I set it up to help people learn the lessons that I did, hopefully at slightly less cost than it cost me. We do a lot to keep people informed. We've got the website. I do a video every week on YouTube and Elite Investor TV. We've got this monthly magazine we do that you can pick up from the Emerald stand. I basically try to make investing a little bit more fun. And I know it's great that the Financing guys also do their magazine, because we've got to make this stuff a bit more interesting and a bit more engaging. I do special reports, I do webinars online, all these sorts of things just to keep members informed. We have more and more rules about who can invest in what. I think the idea that the state can tell us what we can and can't invest in is something that offends me, but never mind, we live in an increasingly regulated world. So I have to make sure for some of our investments that we're talking to the right kind of people, but I know obviously from you guys that you're already in the right area for these kind of things. So as I say, we're now launching the Israeli Passive Income Center based on the kind of strategies I've described. I want to give you 4 specific direct investments. These are not funds. These are things you can buy straight into through your relationship with Financim and the Passive Income Center. The first one is dementia care homes. Now, we have a global epidemic with dementia. In the UK, we have nearly 1 million people now living with dementia. David Cameron has held 2 G8 summits in London in the last 18 months about how we're going to address this topic. The reality is there are nothing like enough facilities to look after people once dementia advances to a certain stage. What's happened here is we talked about banks and the difficulties of bank lending, as JJ was commenting on. It's just the same for care home operators. The banks are very reluctant to lend for new projects, so they had to become more creative. So what they've done is to divide the care homes into individual suites, which are each given a 125-year lease and full legal title. So you end up owning a piece of commercial real estate. At the same time, you then sign a lease back agreement with the care home operator, so they can put your suite within the operational facility. They pay you a guaranteed return of 8% per annum net. And that's for a minimum of 10 years, and it could go all the way up to 25 years. This is a completely hands-free investment. It's not like running a buy-to-let apartment where you get that call that the boiler's broken in the middle of the night. This is all hands-off. They take all your responsibilities on as the management company. At the end of the term, they will buy it back from you for slightly more than you paid for it, between 110 and 125%, depending on what year you do it in. So you have an exit strategy with that, or you can sell it yourself on the open market at any time. This is our latest project. This is the 11th project we've done with this approach. So this is not new pioneering stuff. This is project number 11. It's in Washington in the northeast of England. Their strategy, by the way, is to be in the north of the country where real estate is cheaper, but the fees are still relatively high for the care being provided. The suites are $58,500. We take a first-year return as an upfront discount, so we pay $53,820, and then we get $4,680 a year from year 2 to year 10, and then we can either sell it back or extend the lease back. So it becomes a long-term passive income stream playing into our aging population and this dementia epidemic. The second one, you might think the rarest land in London would be in Kensington or Chelsea. It's actually in cemeteries. There's a desperate shortage of cemetery burial space in London. The government has commissioned several reports which have talked about double-decker burials and all this sort of thing. If you go borough by borough around London, you'll see it says critical, severe shortage, full, critical. We've got the chance to invest in an extension to an existing cemetery, which is an entirely Jewish community cemetery in Rainham in east of London. The developer has bought the land from the Federation of Synagogues. and it's now being divided into burial plots and ash burial plots, which we are effectively buying at a wholesale price. So we buy a minimum of 4 for 2,000 each. They've already had a chartered surveyor valuation at 2,700. And funnily enough, one of the speakers at the conference we were at yesterday used to be on the committee that runs the Federation of Synagogues. And he said, actually, these are worth well over £3,000. Some people, possibly 5,000 or 6,000. So we sign a 2-year agreement with the developer who will resell them on our behalf, at which point we get a 40% uplift, 2,800 per plot. They keep anything above that as their profit. If for some reason they haven't sold it, they will give us our original money back, and they're keeping 25% in escrow to cover that. So it's, again, full legal title. It's land, a very simple transaction. We only launched this a couple of weeks ago, and we've already had literally hundreds of these plots that have been reserved. So this is proving very, very popular, and it's, I think, one that will continue to grow. Let's move from East London now to Chicago. You probably know that the American property market crashed much deeper, certainly than the British and European markets did back in the financial crisis. There are still opportunities for developers to buy properties in cities like Chicago out of bank foreclosure, refurbish them, and in this case, they put them into a scheme called the Housing and Urban Development Scheme. It's been around since 1937. This is not some invention of Obama that's going to disappear after the next election. The tenants are given a voucher, the landlord gives the voucher to the government, and the government pays the rent. So the rent is guaranteed effectively from the government. They also do some where they just refurbish them and sell them for profit to have liquidity in the fund. We can go in for 1 year and get 8% on our money at the end of the year. If we go in for 3 years, we get 12% per annum, paid every 6 months. Or we can roll the interest up for the 3 years and get 42% at the end of the term. So effectively 14% a year. There's a $10 million portfolio that our investment is secured against. At the moment, they have just over 5 million of investor funds in place. So there's plenty of headroom in terms of our security. And you can invest in pounds, sterling, or sterling, US dollars, or euros. So you've got some currency flexibility there as well. So that's proving a very popular one because it's just property, but it's a great return. And the final one I'll share with you is in Germany. Most major German cities have got listed buildings like this that are in a derelict, neglected condition. What this developer does is buy them in that condition, and then through a network of German estate agents, they sell them to high net worth Germans. Because one of the government wanted these buildings to be saved for the nation, but they didn't want to pay for it. So Angela Merkel came up with a very clever plan, which is to give these high net worth taxpayers a huge tax break if they invest in a restored listed building. So something like 95% of the cost can be offset against their income tax for the next 10 years. So it becomes almost a no-brainer for them. So these are quite easy to sell. So they buy the building, they market it at the finished price, and the first tranche payment from the new owner is enough to give us our capital and our interest back. We can go in for 2 years and get 10% a year, or 5 years. If we take our interest, it's paid every 6 months. We can roll it up for the 2 years and get a 2% bonus, so we've effectively got 11% a year. Or we can roll it up for 5 years, get a 10% bonus, so we've effectively got 12% a year. The company has the highest credit rating in Germany. They've done 200 projects already, so they're a very, very solid and safe business. Now, I just want to give you a couple of examples of people who've actually made these investments and tell you how it's kind of been made to work for them. Andrew is a research scientist. His wife, Frances, is a GP, a doctor. They had a London buy-to-let apartment. Now, as the prices have gone up in London, the yields on these buy-to-let apartments have gone down. And they were getting to the point where they thought this is hardly worth bothering. So they sold their apartment. They bought 3 suites in this care home in Wigan and Greater Manchester. The money from those 3 suites was more than they were getting from their buy-to-let property, and there was enough left over in the bank to buy another suite, which they have gifted to their 19-year-old son, who's just gone to university. So he's now got, in this case, it was a $9,000 a year income, all the way through from 19 to 29. And then when he's 29, he gets the capital back. So he can then invest that in his first property. So they've effectively set their son up for life with a one-off investment in a care home suite. Dominic Frisby is one of the top financial journalists in the UK. He's an expert on precious metals and cryptocurrencies like Bitcoin. He has bought 2 care home suites to fund the private education of his kids. He's got, I think, an 8-year-old and a 10-year-old. So he's putting them through school with the rental income from care home suites. So, you know, it's good to see that somebody with his experience of investing did all the due diligence, met the senior management team, and decided to go ahead with that investment. Also, I want to just share a couple of profiles of people that are in the Elite Investor Club with you. Nitzan Marinov is an Israeli who now lives and works in North London. This is what she said about the club. It opens people's eyes about what's out there and that they can do something about their future. It's not black magic. The more aware you become, the more confident you become, you can take action, which is the only way things change. Nitzan is invested in care homes, in the burial plots, and in the Chicago bond. Charles Sayer, he used to work in the financial world. He's now a sort of serial entrepreneur in London. He worked in finance himself and decided he wanted to invest more in assets. He talks about my humor. He's obviously seen my videos. But he likes the fact that I do the due diligence and bring things to him to look at, and that's where he gets his value from. So my conclusion would be that I really, really like passive income. It's the way that, to me, you really get to financial independence. In these days of volatile stock markets, I like predictable income streams. And the kind of investments that I've talked about give you exactly that. You know what you're going to make going in, and you can set your lifestyle accordingly. And what we do with the club and now with the Israeli Passive Income Center is to really help people to take that ownership and get themselves the lifestyle they want with the right assets in their portfolio to support it. Okay, that's what I wanted to say. Thank you for that, and I'll take any questions. Stunned into silence. Oh, sorry, question.
Who can be a member of your club?
Well, anyone can be a member. We'll probably work it through the Passive Income Center, I think, so that we can help you locally as well as, because I like to have meetings. I like to get people together. I think things like this are a great chance, not just what you're hearing from all the speakers, but the networking that goes on at these events, I think, is really powerful. So, we want to try and have these events locally here in Israel. And obviously you can get all the other materials online. So if you speak to the guys on the stand, we can get you signed up to the club.
But what are the conditions?
The conditions, well, there's a 2-month free trial, and then it's a £7 a month membership. It's a nominal charge just to help us cover the materials we produce. The idea is that you just use it to learn, use it to mix with other investors, and hopefully you'll see something in the portfolio that is of interest to you. Okay. Right. Thank you.